So I'm going to hand it over to Jacob. Same routine, that bios are in your packets. You have places to take notes and questions to ask, and we'll go right into the panel.
Great. Hi, everyone. Thanks for staying. We appreciate it. Yeah, we're all very excited for the cocktails and hors d'oeuvres, certainly. Yeah, George promised they would be great. So I think I'm Jacob Haar. I'm the managing partner of Community Investment Management. We're a San Francisco-based institutional impact investment manager that focuses on investments in innovation and lending and other ways of reaching underserved communities with innovative financial solutions that are more forward-looking than backwards-looking. Happy to talk with you all about what exactly that might mean later. But in my role today, I'm moderating this panel, which is great because we have 3 allocators and investors who are going to explain their institutional journey. And I think it'll be really interesting because they're all coming from very different perspectives, but can talk about this resource, which you should have received, which was called the Intentionally Designed Endowment Roadmap. And IEN provided and has some great information on how this looks, which essentially is about learning, coming to some sort of consensus, which is a nice way of duking it out, I think, to see if anybody actually will go forward with doing this, establishing that within an investment policy, and then the nuts and bolts, referencing some of what we heard previously with Wendy's panel on what sort of options you can invest in when you're actually doing this. But just quick introductions. To my left, we have Catherine, who is a trustee of the East Bay Community Foundation and also a consultant, I believe, to other foundations, et cetera. We have Pablo, who is at Dignity Health, and you got a shout out earlier about some of the things you're doing with San Francisco housing. And Mark, yeah, there you go. And Mark, who is from San Francisco Foundation as a director of investments. So I think just to kick it off, I'd love it, and Catherine, maybe you could go first, just talking about the evolution of this institutional journey. First, why? What was actually driving the decision to get involved? And you have a broader perspective because you're working on these issues. So what do you see as, is it student activism? Is it the board of trustees for foundations? Is it actually coming from different stakeholders, et cetera? Mm-hmm. And because I think that's important in trying to understand how it's manifested, structured, and executed.
Right, absolutely. Well, first of all, thank you for having me. Thank you to IEN for inviting me. So just to clarify, I wear a couple different hats up here. So one, I am an investment consultant with RBC Wealth Management, and my focus is on 100% sustainable investing, mission impact investing, really delivering solutions to clients. And I'm also on the board of the East Bay Community Foundation. So I want to give different perspectives, and I guess I have 5 minutes. So that might be a challenge. But first of all, from the investment consultant perspective, I think one of the things that's really important, as I've been talking to a lot of you today, is that everyone's kind of wondering, well, how, what's the right way to do this? Well, rest assured, there is no right way to do this. And I think that's just a level of pressure everyone can just take off of themselves, because I see so many different perspectives and so many different experiences of what organizations, about 70% of my business, our business is foundations and endowments. Okay, so a lot of endowments, and their experiences can range from the most advanced, these, very sophisticated, sometimes a lot of financial people on the board really driving it. Sometimes it's a trustee who gets kind of really interested in it and just drives it. Sometimes it's a staff member who has a real passion and a real energy around it. So there's no right way to do it. But I think the important thing to know about that is any one person has a lot of power to be a catalyst. And I think especially maybe at the staff level, and I know a lot of you I've met today are on staff, you think, well, maybe this is kind of like the trustees' decisions. This is like the board. Oh, that's like the board has this big thing. Well, actually, in fact, I think you'd be surprised how many organizations get a lot of momentum from staff. And so never underestimate staff's very important role in advancing a very important dialogue. So I think that's an important thing to remember. Second of all, it all does start with kind of education, right? So someone gets kind of an inkling in their head, learning. The good thing about today is it's so easy to learn. I mean, 20 years ago when I was talking to boards, it was a lot tougher. The resources, the studies, the financial analytics, the data, case studies, academics, organizations, studies, they just weren't as plentiful. Today, you can just do a really quick Google search and the pages and reams of data that can come up. The amazing stuff that IEN has put together just in preparation for 4 hours today is fantastic. That just wasn't there 20 years ago. So really, there is no excuse because the information's there and really a lot of times just free for the taking. So I think that's important. I would also like to mention that from a momentum perspective, that's kind of one of the things about building consensus that's really critical, is that we tend to live in our own bubbles, and we're all so busy. We're running at 10,000 miles an hour, right? Every one of us. And I think we tend to forget that people just learn at their own rate. I've seen this time and time again with different institutions. A board member will say, oh gosh, I convened a meeting and no one did anything about it. Well, I'm like, well, just because you did one meeting or just because you sent one email out, just because you sent one study out, that's just not gonna fly. I mean, all of us are skeptical by nature, right? Right, we never do anything just because someone tells us to do something once, right? And I can test it. I have 2 kids at home. They never listen to me, right? So the thing is, you just have to have even that one person, maybe the staff member, or maybe the board person, who has the passion, who will keep the momentum going. And that's really critical because nothing gets done in any organization, especially the size of the organizations that all of you represent, which are very large, many of them. Nothing gets done without constant discussion, momentum, and really kind of a champion, someone who's willing to kind of take the lead and willing to just kind of keep, being that kind of, thorn in the side and saying, hey, let's keep on talking about this. And talking about it is one way, studies are another way, because we all learn different ways. And one of the things I've seen is really effective is that a lot of boards, invite, peer members in. They'll get, it's a foundation who's thinking about this. They'll invite a trustee of another board in. They'll invite, issue experts like many of you are sitting here today. So it's education through a lot of the studies and the great information that everyone read, I know, in advance of today. But it's just dialogue, and we all learn differently. Some of us learn by looking at charts. Some of us learn by looking at data. Some of us are, numbers wonks. Some of us need the narrative, and it's the constant narrative. So don't be afraid to be experimental and try different things, because I think that's really important. Now, kind of, bring it down to kind of the IPS level. What I want to just, talk about is the journey of EBCF, because I think the wide perspective is one thing I want to make sure everyone that I got out. But with EBCF, East Bay Community Foundation is based in Oakland. It's a community foundation, and the organization is committed to eradicating structural barriers, all for racial equity, and really being the catalyst for making a just East Bay. And so that's our mission. And the board has spent the last couple of years really revamping the mission, vision, and values. And the great thing about the organization in its journey has been that as new staff members and senior staff members have come on, it's been somewhat a kind of tie-in with some board switchover, to the point where at least the experience for the foundation was very much a synergistic one. It wasn't a question of if there was going to be mission alignment in the investments. It was just what's the pace at which the organization's going to go. So that kind of critical factor where I think some of you and others outside this room are struggling with wasn't as much of a discussion. It kind of came together with an alignment with staff and the board.
So with staff and the board, essentially, that aligned around this is something we should be doing.
Absolutely.
And was that conceived as PRI, MRI, or both?
So in terms of the kinds of investments, there's a whole range. So given the East Bay focus, obviously there's focus on some of the local financial opportunities. CDORS, for example, has been something of a focus. There's been a focus with looking at the mix of the investment managers, looking at gender and racial diversity as a focus. And I think it's really important from an investment policy perspective. This is board directed. This is codified in the policy. So it's something that is very much a focus of.
And when did that happen?
Well, it's been a transition probably over the last couple of years. Mm-hmm. Yeah. And I think the critical thing, and I'm looking at Christine Lim sitting in the back from EVCF, she is amazing. She's been part of a committee that usually you wouldn't see a non-finance person. So Christine is not part of the finance department, but she's on the investment committee. And I think that's a really important thing for some of the other folks here, is that the investment committee should be a combination of just not financial people, but folks who are represented in various parts of the organization, program development, to get the full synergies of the organization. And so that committee has been critically important in terms of kind of pushing ideas and really pushing the agenda as well from both sides.
Well, and especially as we're talking about how East Bay Community Foundation pulled together, maybe Mark, we can pull you into this conversation around, you're also representing a foundation. Yep. What has your journey been? Was it similar around staff as well as the board aligning at a similar time, or was one pushing more than the other, or was it coming from another source like the investment team or rather, sorry, the investment office rather than the programmatic staff?
Yeah, so I'm Mark Doherty. I'm the Director of Investments for the San Francisco Foundation, and I've been there about a year and a half. So a little bit of what I tell you is sort of narratives that's been passed down to me in storytelling as to how the journey was led. I would say that a few years ago, we had a new CEO put in place. And when Fred was put in place, he really took a moment and said, okay, what is the mission of the foundation going to be going forward? I want to be at the helm of the ship that I'm comfortable leading for 21st century challenges for the Bay Area. So we have what we call our equity agenda, which is really, I think, very similar to the East Bay, around promoting communities with greater racial equity and economic inclusion. So what that means is, in layman's terms, that everybody should have the ability to a great education, a living wage job, an affordable place to live, and a powerful voice in your community. And what that led to was, here's our North Star. Our board is now clear on where we're going. We then started to think about how we were investing. Are those things in alignment with, or are they not? And where they weren't, let's make some changes. So there was also some board personalities that shifted over time. Some storytelling that goes back into previous eras of the Community Foundation, talk about, classic, hey, that's great, you're doing the good over on the 5% side of the house, but over here, our job is to make the money. So go make grants. That's no longer the approach, to be very clear. We have a very intentional, hence being here. The way that we think about allocating is across all of the money, the $1.5 billion that we have. It's not just within the PRI or the MRI that we think about how we're investing. It's across the whole of the portfolio. I would say that a key part of that process is not just the asset class or the outcome from an impact perspective, but also the ownership of the management structure. So we're very keen on the diversity of our asset managers.
The program really separated from the treasury component of the organization, even though we're very much aligned and working together. But they said this program is going to live under the community health umbrella. So community health for us is everything to do to address the issues outside of our hospital walls, and that includes the community benefit regulations and requirements. This is a tool for our community health directors at each individual facility when they're out in the community and they can identify ways to invest, that they will identify and then bring it up to the system office, say, look, there's this clinic that wants to become an FQHC. There's this housing developer that needs pre-development money. There's this organization that's looking to do some job creation, is there a way that we can invest in these? And that's how we are able to do what we've been able to do.
Yeah, maybe I'll tackle that. So as a community foundation, we don't have a compensation structure that's incentivized to, hey, I got a bonus because I outperformed the market. Unfortunately, I don't get that structure. I left that behind in previous lives. But I would say, to answer, how do we incentivize or get our staff excited about this? I think it's twofold. One comes back around the governance point. So we have PRI and we have MRI approaches to the impact investment strategies. And what we found was that as it comes to our MRI, we really wanted to make sure that before we brought any consideration to our investment committee, we wanted to make sure that the actual investment solution, the actual asset manager, was doing things that were supportive and really were backed by the management team. So the process that we agreed to in governance was that I work with the Colonial Consulting, they give us the recommended managers, we then I take that to the management team, make sure that it really makes them, in their words, sing, like, yes, this totally makes sense. This is what we're looking for, and it totally aligns with what we're trying to do programmatically on the other side of the house. That is a real big motivator for a lot of the members of the staff, because that's bringing their voice to the table. They're able to actually be an advocate for solutions that sometimes I think in the investments team, on the finance team, you don't feel like you have a voice on that. Equally on the PRI side, it's co-led by our CFO and the head of programs, and both of those groups get around the table. It's led by the program side, who says, hey, we have some great local organizations we want to make a loan to. What do you all think? And then it's sort of a collective voice that then takes it to the next stage of underwriting. So I think it's having that voice at the table that really makes a big part for the staff.
What have you seen, Catherine?
So similarly, there are no incentives, from the EBCF side, from a financial basis. I will say, though, that this revamped investment committee has a ton of energy, and the staff is really jazzed up. They're very involved in a lot of the decision making in terms of some of the directives, policy issues. And so it hasn't been a question of getting anyone aligned. I mean, it's kind of full boat. The goal, eventually, it's not 100% yet, but the goal is over the long term, 100% mission aligned investments. That's been a very strong sense from the staff and the direction that they want to go in. So there's been no concerns on incentives.
I just want to share a story. So one of the biggest challenges that has been in the 15 years that I've been with Dignity was when we first started bringing bigger projects to the investment committee for final approval. They were debating the investment, which might be a $5 million investment, longer than the overall portfolio performance. So it was really funny that at the end of the day, they were more interested in this loan than what the overall structure of 10+ billion at the time performance was. Nowadays, they're on the consent calendar, so they just basically, if staff recommends it and they've gone through the due diligence, we're fine. We're not going to spend more than 5 minutes talking about any one specific loan. So it's been a transition to make sure that the investment committee gets comfortable with the projects that we've gone through really deep due diligence on to be able to recommend. Otherwise,
And is that an indication of performance?
that is an indication of performance, trust, and I think the history of the program.
Right.
Yeah.
So for an audience of university endowments, a different compensation structure than the foundations, which you guys have talked about, much more separation between the investment side, and typically people who are looking at any sort of programmatic or grant making ability than you all would have in house. What advice would you have for them as they think about building out these programs, and what can you share about performance of your portfolios and how to set this up for success so that you can build that trust that, Pablo, you were just speaking to?
So we currently have a portfolio of $160 million of loans. That varies in sizes and in categories. I think that what's been really important is not only the performance of the portfolio and the quality of the portfolio, but for us to take to educate our investment committee, which is a subcommittee of the board, so board members are on the committee, to educate them that the return on the portfolio is not only the return that we're getting, which is, we have to have a return for the overall portfolio of the 3-year blended CPI, which right now is like around 2.2 or something. But it's deeper than that. The fact that you make a loan to a respite care center that allows a patient to leave the hospital to a respite, which is a lower care setting, a less expensive care setting, therefore reducing the lengths of stay, therefore reducing the cost associated with the individual. And it might be a homeless individual or an individual who can't pay. So at the end of the day, when you educate the investment committee to look at from a mission, from a return, from the security of the actual loan, and then the additional return that it's really not measured as an income generator on a standard return on an investment. But the other thing that the investment committee has learned, even though we have in the years of the program, our loss rate is like 0.07 or 0.07 something, is that if we do have a loss, we can convert that loss into a charitable donation and therefore account it as a community benefit for the organization. So that, in a way, all of these pieces have made them comfortable with understanding that there's more to this just making a loan.
Wow, that's a pretty unique advantage.
It is. So maybe just to say a few words in terms of my counterparts at the universities and their investment committees. I've heard a lot today about positioning of mission related intentional investing to committees, and how does one speak to them to actually get it through the gate and approved. And I think to echo one point that was mentioned earlier, don't let perfect be the enemy of just getting started. I think everybody has to understand here that no one has it figured out perfectly. I mean, we've been in existence since 1948. We've had an endowment since that time, and we continue to tweak that endowment. It's still not optimized and perfect, right? So why would we hold ourselves to a different standard when it comes to this type of investment? Second, I would say is that it's no longer, I think, really accurate to expect concessionary returns when you're talking about MRI. I think that's somewhat of a falsehood, that a lot of the data that we've talked about earlier, you can lean back against pretty heavily and make your case pretty strongly. And then the last thing I'd leave with is just on the diversity part, that we really feel that the reasons that we're trying to allocate capital to diverse managers are really around 3 things. One, it's in alignment with economic inclusion, which is one of our core pieces of the work. 2, it's around cognitive diversification, right? That the groups that we're investing with think differently than I do as a white middle-aged guy. And that thirdly, there's alpha generation to be had there, because their ear is to the street in a different community, in a different network than all the other asset managers that we might have historically been investing with. So I would just leave you with those points, that it's, jump in, don't worry, there is market rate to be had, and you can continue to improve over time.
And just adding upon that, so how many of you in this room have made a traditional investment that didn't do as well as you had hoped? Every single one of you, right? There is this notion that there's some performance give up is a false notion, but the issue is there's some assumption, because it is mission aligned, it's impact, you have to give a why is that the narrative? Why isn't that? I've done a ton of diligence. We have some superstar folks mining the investments. They can be from diverse backgrounds. Why is that even a consideration? We've all done the homework. What's there to be afraid of? There's nothing to be afraid of. Just like the traditional investment management world has a lot of stinkers, there's no industry where you're going to get 100% perfect of anything, right? So, trust your, research, trust your diligence. trust that this is the right thing to do. And if you can show that, you should be home free.
I would just finish on one point, though, that just when those committee members that we all face bring up those objections, challenge them, right? Really, question it. Don't just let it pop up and be unchallenged and be like, oh, yep, you're right. There might be, no, and really, pull on that thread and see where it takes you, because oftentimes it might be just sort of well, actually, and then you can unravel the whole thing.
You mean about the potential risks in this investment,
Yep.
but yes, there are similar risks in our traditional investments as
That's
well.
right.
Right.
That's right.
Yeah, sure. So would love some questions from the audience. Right here, we have one.
Thank you. You all have access to a lot of resources, and I wonder what the small endowment or foundation would do when they can't do all the due diligence. They want to start taking these steps. You finally get some buy-in at the board or the committee level, but there just isn't the staff. So how do we collaborate if you guys found some good investments and you found some good investments and you found some good investments? Why can't we, with our smaller portfolios, co-invest with you on some of these impact things? Is there a way we can collaborate?
Well, and
in
also, I
and
think
share?
one of the critical things is sharing of the diligence costs. One of the things that we have, even within our own, client base, is spreading those, expensive diligence costs, because, if it's very targeted, a very specific geographic region or very specific issue area, it can take a lot.
Place-based would be that.
And it can take, a lot more time and, digging and all that. So that is a perfect way for institutions to be banded together is, okay, there's 10 organizations, you come together, you split all those costs, and then you make it that's one element of the sharing of resources.
So if I can share, we don't have a lot of staff resources, but if you are going to get into the space and you don't have capacity, the best partner that you can have, are CDFIs still here? Oh, there you are. They're the best partners. Not only you can invest in them and they can leverage your money and extend your reach into many areas, or you can co-invest along with them, keep your rate low so they can get a spread, and they can do all the due diligence for you. They can do all the monitoring, and if they're really good, they'll get you your money back.
Yeah, I would also just call out consultants. I mean, there's, if you look at the practice that, for example, folks are Cambridge has a very deep practice in mission-based investments. And, clients will come to them and say, we have a local foundation in this rural area of this state, and they can come up with place-based options because they have surveyed the market and they have a good sense of that. So we get requests like that all the time where people come in and say, we're interested in New Mexico. It's just a foundation in New Mexico. There's very few place-based investment options. And so then we and others will put together information for them so that they can have that broader reach. I think it's challenging if you're on your own with your limited staff and resources to find the very few community investment options that may cover the local area that you want to invest in. Yeah, and be diversified in terms of risk.
I've got the mic.
Yeah.
Question over
Sorry.
here.
Yeah.
So I'm really happy to hear today that that they're great stories, that there's the CDFIs have a 30-year history, that you guys are doing great things, and that there are many, many success stories. We don't have to look at, gee, it's either a donation or it's investment. We could be making ESG investments that are going to have a good return. Do you have a source of data or something that we could go to? Because, to persuade a board, an investment board, say, we really need to have a lot of data. Even though, Catherine, you make a very good point, there are stinkers out there, but still, to be able to say credibly to somebody on a board, don't worry, all these other kinds of investments also have equally good returns. Because what I'm hearing today is that, which is great, but where would I go to see that kind of information?
Yeah, so IEN has a lot of that information on their website, and they can provide that. There's also, Cambridge came out with a private equity study that looked at venture and private equity returns in the mission versus traditional space. There's been studies on private credit, and generally those studies will show, the mission investments tend to be younger in track record. So it can be challenging in terms of less exits, less track record, et cetera. But from the information that is available, generally those investments are outperforming the traditional investments. At least that was the case for both private credit and the private equity studies that I've seen.
And then you can look at Confluence Philanthropy. They have a wealth of information. Mission Investors Exchange, lots of different cohorts, a lot of different organizations, which IEM partners with, just so much stuff out there that is really free.
But that's exactly what you were saying in the very beginning, which is 20 years ago, there was nothing. And
you couldn't do a Google search.
And today you can find, randomized, like very, very well done scientific studies that have tracked over many years the two and compare together. And I think that is one of the reasons that we are seeing such a flourishing of impact investment, ESG, because the case is there that for the fundamental investment case, which is needed if you're going to go beyond just doing something because it was mandated from a community perspective, but because it also can be a way to deliver better risk-adjusted returns over a long-term period.
Hi, thank you so much for your comments. I'm wondering specifically around diversity, what conversations you're having with consultants. How are you pushing them there? Are you working with consultants that are owned by men and women of color? And then secondly, as we have this conversation, what internal work are you doing? Since, data and studies show that this is where all the bias comes into play. So what internal work are you doing around this to match the values and the language that you're putting out?
Yeah.
No, I don't do consultants. So.
I'll take that one. So we work with Colonial Consulting, and I've worked with them in two chapters of my career. First with Silicon Valley Community Foundation, and now at San Francisco. And back when I was at Silicon Valley, I bring them up for the fact that at the time, the CEO challenged the consultant and said, hey, what's the diversity of our asset managers? And the consultant said, well, I don't know. This goes back 2012. And from that, they wrote a paper that said, hey, we looked at this, and it turned out that, one, we didn't ask the questions. Two, it turned out that, not surprisingly, it was a homogeneously white male-driven business. And three, we're going to do a lot of things to fix that. And so, to their credit, fast forward now to 2019, I still work with Colonial at San Francisco Foundation, and it's very much a core part of their practice. And I think that goes with a lot of the various consultants. I'm only familiar with Colonial very, very closely, but each of the ones that I've touched at various conferences all have this as part of what they do. And I would say that it's something that they have as a core part. It's not just something that they tick a box on. They, I think, understand not just the mission alignment, the value alignment. They see the alpha applicability, because from their lens as a consultant, at the end of the day, their job is performance, making sure that they're able to hit the benchmarks, right? So in terms of our internal piece, I think that was the second half of your question. There's been a lot of research done recently around implicit bias and the unintentionality of that, if you will. And so what we've done with that research is shared it across with our investment committee, shared it with our board, trying to raise their awareness and our own awareness about the decision trees that we're walking down and how we're making our decisions, so that we are at least trying our best to be mindful of it. And then I think it's very much a core part of our foundation in terms of its equity. We have a whole internal equity work that we do. It's something that we speak to all the time in the foundation, from board, management, senior leadership on down.
Right, and that's an excellent study. If everyone hasn't read it, Darren Dodson leading that with Stanford on unconscious bias. It's out there. Another Google search that you can do and get that information. But in terms of the consultant role, it's critically important. Certainly, within our practice, it's a very focused diligence part in looking at any investment manager. And I think most investment consultants have that today, like you're saying, because Colonial does that. A second thing that's really important, you as investors, you have the power. The fact that there's a 1% diverse or racial, diverse managers in the universe is pathetic, right? But you're the ones who can change this. This is not, oh, the consultants told me it doesn't work. No, this is you demanding this. It's you have all the power in the room as your role as a client. And I think that's really important for you to remember, because if the consultant is saying no, well, go find another consultant. But the consultant will do what you ask them to do. And I think you need to remember that.
Yeah, and just from the impact investment manager perspective, I mean, I can speak to this because we, 2005, when we started our first impact investment fund, nobody asked about diversity of our investment management team. Nobody. Today, Colonial, Cambridge, Goldman Sachs, everybody is doing annual diversity check-ins, not just on, how are you dealing with racial equity with your investments, but also how do you see this reflected in your team, in your ownership, in your board, et cetera. And I think it's great, but I mean, we all have so much work to do. I think exactly that point. So, I think it's great that there's this renewed focus on it. I mean, the Kellogg Foundation, Surdna Foundation have really been leading the way. I think there's other folks that we just heard about a new consulting practice that's going to help folks continue to work on this issue.
Put it in your investment policy statement that it's a requirement to evaluate a wide range of diverse managers, from a gender and racial diverse perspective.
We're out of time? Okay. Thank you for a great panel.